Hello and welcome to the Crypto Beat. My name is Tim Copeland. I'm the editor-in-chief of The Block. Joining me today, we have Superfluid co-founder and CEO, Fran Renzi. Welcome to the show. How are you doing?
Good. How are you?
Yeah, doing well, thank you. Before we get started, I want to give a shout out to our sponsor, Awaken, crypto tax software provider. Make sure to use the code TheCryptoBeat for $25 of free credit.
The only thing worse than getting rugged by Hawk Tuah is doing crypto taxes. Meet Awaken, crypto tax software that actually works. Built for degens by degens. What's their magic? Maybe it's in their automatic integration with the most popular blockchains and exchanges. Maybe it's their custom support for more than 25,000 smart contracts, which allows them to label over 90% of your transactions for you. Or maybe it's their custom AI assistant that helps you label any transaction you're still not sure about. Still not convinced? It gets even better. This year, transactions on Solana, Base, Bitcoin, Hyperliquid, and Sui are 100% free. So stop using tax software that could be losing you money and get started with Awaken for free. Use code TheCryptoBeat for $25 off credit or click the link below.
Now, today's episode is around the idea of money streaming into your crypto wallet every second. And so Superfluid is quite a unique thing. It seems to essentially stream crypto like nothing else. So Fran, what is Superfluid? Like, how does it work?
I mean, like you said, right? Superfluid allows you to send money continuously. We call this money streaming. So just basically a way of making payments where your funds are transferred second by second rather than in lump sums, right? So we often make the analogy of, like, imagine if on YouTube you had to download a full video before watching it, right? Well, that's kind of how your salary gets paid, right? You have to work a full month and then you get paid. With money streaming, you can get paid every second, the same way when you open YouTube, you can watch a video, you can download a video while you watch it, right? So money streaming is, in our opinion, kind of the future way that all recurring payments will be made. So rather than making them happen, let's say, on a recurring basis, you make them happen on a continuous basis. So payments that basically happen continuously. The way it works, I mean, it's we can get as technical as you want, but basically it's just a different way of doing accounting, right? Blockchains are very good at doing accounting, but at the same time, most people seem to still want to use them in a very traditional way, right? So if you look at most tokens, most transfers, they're still done the way banks do them, right? So traditional banks use traditional ledgers, and ERC20 tokens on Ethereum and other tokens on our networks pretty much work the same way, right? With traditional token transfers, where in 1 second, your account loses money and your counterparty's account makes money, right, in an instant. The way Superfluid works is we basically built a different kind of ledger, which enables what we call streaming accounting, right? So what that means is when you make a transaction, instead of saying, I want to send Tim $10, what you say is, I want to start sending Tim $1 a second starting now, right? And when that transaction is settled, what's settling is not the actual transfer, but it's the beginning of the transfer. And then after that, money will start moving from my account to yours, every block automatically on chain, right? And it will actually settle on chain every block without me needing to go and do multiple transactions afterwards. So it's fully automated. It really just uses the blockchain to to calculate settlement in a slightly different way. But I think that's what makes it very powerful, right? It's fully on chain and fully automated.
So I'm kind of curious how that works. Because sort of obviously it sounds like the sort of ideal situation, like with ETH, why don't we just sort of allow it to also make countless transactions per second? Like, if you're streaming, you're kind of turning like one transaction into like thousands of transactions. Obviously, to do that with like ETH or Bitcoin, it would be you'd either block up the network or have to super expand the network, and you get huge network bloat and everything like that. So how on earth does this work in a way that doesn't hit those sort of issues?
Well, the way it works is basically we built this new ledger technology, right? Which is just a way of using the database that already exists, right? The blockchain is I mean, Ethereum, let's be specific. Ethereum basically allows you to create smart contracts, which are logic, and it gives you access to a database, right? You can create your own database. So the ledger that we created is just using Ethereum. And what we did, which I think was the real innovation, is that we built that into ERC20 tokens. So to use Superfluid, you need to use what we call super tokens, which are tokens issued through the Superfluid protocol. And these tokens basically have streaming built in. And what that means is instead of using a traditional ledger, which, like you said, requires you to make a transaction for every transfer of funds, right? Super tokens use the Superfluid ledger, which doesn't require you to make a transaction for every transfer of funds, but rather it only requires you to make a transaction when you open a stream, right? So the only transaction that goes on chain is when I say, I want to pay Tim $1 a second, right? I make a transaction to say that, but after that transaction is confirmed, there's no more transactions on chain. Like, for example, I'm getting paid my salary in a stream, right? There was one transaction years ago that opened that stream, and then there were no more transactions on chain.
Okay, so who's keeping like the records of how much money is in each account? Because like if you're getting paid every second, the amount of your account balance is continuously changing, and
Exactly.
someone has to keep a record of that change. Like who's doing that?
The blockchain. Short answer. So basically what happens is instead of storing the data, right, which is what traditional ledgers do, right, is that traditionally you would literally write the number, right? So when I make a payment, I cancel out the number, write the new number, and that writing is your transaction, right? What we do with Superfluid is that we calculate your balance. So when you ask the blockchain, what's my balance? It won't, it will basically calculate your balance based on the current time, if that makes sense. So
Yeah.
what that means is that basically because the time is always moving forward, your balance is always updating because based on the current time, it will calculate your balance. So it's a different, that's why I say it's a different kind of ledger, right? Traditional ledgers are static. It's just a list of numbers that you kind of wrote in. You can think of the Superfluid ledger, it's more like an Excel sheet with a lot of functions, right? So the moment you update the time, everybody's balance updates. And that's kind of the magic of it, right? It allows us, I mean, at the moment we have like 100,000 users with active streams. Every block, all of their balances are updating automatically with no gas costs, right? So it's a really kind of scalable system, and it's just a different way of using the blockchain, which I think we're the only ones doing it. But yeah, it allows this very, very cool system of moving funds every second with no gas costs.
Is there a block explorer for Superfluid yet? Because I feel like whoever like would have to build it would probably hate you guys and be like, why have you done
Yeah, we
this?
built it ourselves because, like you said, everybody else would hate us. I mean, honestly, accountants hate this, but
Yeah.
we can't move slower just because accountants would hate us, right?
I mean, I was going to ask, like, isn't this kind of a pain in the butt for like taxes? Like, especially let's say if I'm getting paid in dollars and like I'm in the UK, so then I have to like whenever I get income in dollars, I have to convert it to GBP at the time of the transaction. So if you've paid me in like 1,000 increments, I have to do like 1,000 conversions.
Yeah, I mean, it depends, I guess, how um, it depends on each jurisdiction's tax code. It depends on how precise you want to be in your declarations, right? But yeah, I mean, in theory, you're correct. In practice, I don't know. I don't think the tax authority would want you to do that, especially because probably every micro settlement is less than a penny, right? Which means it probably wouldn't, every tax declaration would be at zero. You just basically flood the tax authority with zero penny declarations. I don't know if they'd appreciate that.
Yeah, I've always wondered that because I noticed like HMRC rounds, whenever you put in a number, it just always rounds to like the nearest pound.
Exactly. But here the nearest pound is zero.
Yeah.
Yeah. But every time I speak about Superfluid, every time I give, talk about it, there's always that one accountant in the audience who will, put up their hand and say, "How do I declare taxes on this?" And I'm like, ask HMRC. I don't know. This stuff is complicated. But at the same time, I think, if we were kind of concerning ourselves with that, we wouldn't have any of the stuff that we've built in crypto, right? So we shouldn't kind of let the tax authorities in the driving seat.
Yeah. How complicated do you think this could end up getting if you have like an insane number of users and each user has like a lot of different streams? I just feel like that's surely just like an awful lot of calculations to find out who has what at any point in time.
No, it's actually really scalable in that sense. So that's not a problem at all. It's so scalable actually that you can literally have a million streams and it's exactly the same cost for the blockchain to calculate it. It's at one point there was an app built on Superfluid that had a very, very successful launch, and there were 200,000 active streams in a group of maybe 2,000 users, right? So like, a very, very active circle of users. And what was really cool is that they were all streaming to each other, right? So like the money was flowing around really quickly across all these users. Um, and it, it was actually quite intuitive for everyone, like including for the users, even though like it's obviously kind of a very weird way to think about money. Once you start using it, you actually realize that the only thing that matters is my balance going up or is my balance going down, right? And if your balance is going up, then you're making money. If your balance is going down, you're losing money. But streams are just I guess a different way of thinking about payments, right? Instead of thinking about payments happening once a month, they just happen all the time.
Like, what if two people decide to like sort of set up multiple streams pointing at each other?
Yeah.
For the first one to know they can send the stream to the second one, they have to know how much is sort of coming back the other way. Like, in order to calculate if you can send money, it has to calculate all of the streams coming towards you. I guess if you're sort of putting a bunch of transactions in a single block, it's just continuously kind of having to calculate states for like each user before it sort of can do each transaction.
So interestingly, that was probably the first hard technical thing we had to solve when we built the protocol. But we actually found a solution which kind of eliminated the complexity completely. Which means basically it doesn't do all those calculations. Because like you say, doing those calculations is actually impossible on chain. And the reason is not so much that I could be receiving streams from 4 people, but it's that those 4 people could be receiving streams from other people who could be receiving streams from other people, right? And with Superfluid, because we basically eliminated the need to make those calculations, you can have a graph of arbitrary complexity. Like you can have any number of users streaming to any number of users, uh, basically with any degree of like, any amount of levels, and it doesn't impact any calculation cost. Which is why I say it's very scalable, right? You can have a very, very complicated graph and it doesn't matter.
Yeah. I mean, I guess you sort of need that because with sort of 7 degrees of separation, it wouldn't be long before anyone wants to make a transaction. You'd have to verify every other account because they're all like, there's at least one link from each person to everyone else.
Exactly. And actually one interesting thing is because we eliminated that, you can literally set up circular streams, right? So, me and you could send a transaction in the same block where we stream each other $1 a second each, and the money would just kind of go back and forth really fast. Um, and that again, that shouldn't be possible, but it is, because why not?
This sort of reminded me, I feel like I remember a while ago developers complaining about Ethereum calculating just like wallet balances. Like I thought I remember it's actually just surprisingly complicated to calculate an ERC20.
Oh no, that was actually the Ethereum balances were hard to calculate. Yeah,
Yeah.
yeah, you're right. It was. I remember that was all Bitcoiner trying to troll the Ethereum community because we couldn't calculate the total supply of ETH. Right.
Oh
Yeah.
yeah, that was it. Like,
Good times. We have bigger problems now.
was it Pierre Rochard? I think.
Oh
Like,
yeah,
yeah,
yeah.
there was someone who was like an accountant. Who was like saying we don't know how much ether is. Like, do we ever solve that? Do we actually? Have we found out how much ether is? Maybe we don't know.
I think the final kind of endpoint of that conversation was that there were actually 3 or 4 different calculations. So I don't think there was actually a solution to it. But at the same time, I think the Ethereum community's answer was that who cares, right? Like, there's more interesting things to talk about Ethereum than just how many there are. Unlike Bitcoin, where literally the amount of Bitcoin is the only relevant aspect of the chain, right? But yeah, I guess that was kind of the lesson there for me was don't talk to your competitors' talking points, right? Like, the Bitcoin talking point is there's only 21 million Bitcoin, but so many more interesting things happening on Ethereum.
And I guess it sort of doesn't matter how much ether is. It's just not worth very much either way.
It's down only anyway, right? So it doesn't matter.
Literally, yeah. It was a CMS intern who posted a tweet yesterday where he had a meme that didn't even mention ETH, but you knew the meme was about ETH. Like, that's how bad it is.
Yeah.
Yeah, so I was curious, how does Superfluid then integrate with other networks? Because I played around a bit with some of the protocols, and I noticed, like, I think like one was on Base, one was on a different network. How does that work?
We built Superfluid for Ethereum, so it's compatible with everything. We've since actually our first deployment was on Polygon, funnily enough. So we built it for Ethereum, but then just before we launched, DeFi summer happened. Ethereum became incredibly expensive, so we decided to go L2 first, right? And L2 at the time meant Polygon, so we deployed on Polygon first, and then slowly kind of made our way to every other major EVM chain. So we're currently deployed, I think, on 12 different networks. There's a few more that we're in talks with to deploy on. Since the launch of the Superfluid token, this is now a Superfluid DAO decision. So if our DAO decides to deploy on a new network, then that's something that we need to do.
So is the token launched? I was a bit confused because it seems to be it. You have what looks like a pre-token launch points program, like a season campaign thing, but it sort of seemed to be paying people out in tokens. So I was curious,
Yeah.
like, has it launched? Like, where it's standing?
Yeah, so we don't like airdrops. We think kind of airdrops are a way for projects to kind of farm their users and kind of do all sorts of things that aren't really wholesome, and then paint the chart red just by definition of creating a single point in time where everybody is getting paid and everybody has the incentive to sell, right? So we decided to do something a bit different. We also don't like points because points, I mean, first off, they're off chain, which, is kind of missing the point of building on blockchain, but they're also dishonest because ultimately they allow project teams to do things like change the rules midway, kind of dilute users, give users basically unclear payouts, right? Because with points, you don't know. I mean, I have 1,000,000 points doesn't mean anything, right? You don't know how many tokens that translates to. So the way we decided to distribute our token is through something called streaming programmatic rewards. So it's a bit of a hybrid between a points program and an airdrop. where you earn points, but the points immediately translate to a stream of tokens. So, for example, there are some NFTs that if you mint them, they give you points, right? So you can go, you mint the NFT, and then you go to the claim application on claim.superfluid.org, and you can claim a part of the stream, right? So it does give it gives a lot of flexibility in the way that the points and the tokens are allocated, which is something that we like from points programs. But it also gives users the certainty that they got those tokens, right? There's no, we can't rug them later, we can't change the rules, we can't dilute them. They got the tokens, they're in their wallets, they're there, right? So that's kind of how we decided to do it. At the same time, the token is non-transferable at the moment, pending a DAO vote to make it transferable. So that's out of our hands, which I think is the great part of blockchain governance. It's now in the community's hands. And also, I think one of the things I really like about our distribution is that it is fully in the community's hands. So it's like you saw it was based on seasons. Every season will be voted on by the community. So the community basically decides how to give themselves tokens. And, over time they earn them, ideally by means like using ecosystem applications. That's how it's currently set up. But, maybe the DAO will vote to just give themselves tokens. We'll see.
It seems like you've decentralized very early then, which could be a bit of a risk if people start like saying, all the community, the next season should be focused on things that like they know they would get a lot of.
Well, we'll see. It it's hard to predict. I mean, so far all the participation we've had has been really positive. All the people who have set themselves up to be delegates are people who have a good standing in the community. But governance attacks are real, right? We've seen people do them on a bunch of different protocols. Hopefully that doesn't happen to us, but we'll see.
How was ETH Denver?
So I think the contrarian view that I have is that this ETH Denver might have been the best so far. Everybody hates ETH Denver. Honestly, I really didn't want to go to ETH Denver either. But I think it was my favorite, like hands down. It was the best I've been to. I've been to ETH Denver at this point every year for 6 years, and this was the best. There is a chance that is just because the weather was really good, right? Usually it's incredibly cold in Denver and everybody gets sick, but this time it was nice and sunny, so you could be outside and it was more enjoyable. But I think also there was probably a bit less money flowing around, which made people very obnoxious a couple of years ago. Well, I guess more than 3 years ago, right? There was a lot of money flowing around at ETH Denver, and it was a bit much, maybe. But this year I had a lot of great conversations, and I think the vibes were really good. So yeah. Were you there?
No, I wasn't. I've never actually been to an ETH Denver.
Oh, you
But I
should.
did hear everything seemed very sponsored this year, like every element of it.
It's always very sponsored. Honestly, that team is incredible at getting money from sponsors. I mean, it's if you look at the wall of sponsors at ETH Denver, there's 6 million logos on there. Like every single crypto company on the planet seems to want to pay them, which is great because they throw a really good event. Again, there's a lot of people who hate ETH Denver. I never hated ETH Denver, but I always hated Denver, and now I don't hate Denver anymore. So I'm looking forward to going back next year.
And what came out of your hacker house?
Oh, our hacker house was really amazing. Probably the highlight of my year. We did basically we had 15 builders in the mountains with us. We were building a lot of different ideas on Superfluid. Had a couple of projects around public goods distribution. One project which was very interesting that was building crypto equity. So the idea basically that they were developing is how basically using Superfluid to build tokens which can distribute dividends automatically, basically. So just imagine a token that just by holding it you literally receive a stream of dollars in your wallet as dividends, right? And they built an integration with Uniswap so that you can trade these tokens without Uniswap getting dividends, because that was the problem, right? If you're trading on Uniswap and the token is giving dividends, then Uniswap is going to get the dividends too, right? So they kind of fixed that problem, which I thought was very cool. And yeah, that was probably my favorite, and that was the project that we awarded as well. There was another project that was very cool, which allows you to deposit assets into DeFi and earn the yield in a superfluid stream, right? So usually your yield is built into the token, right? So imagine you put 100 USDC into a vault, and then a month later you withdraw it, and now you withdraw 105 USDC, right? That's how it usually works. You put in 100, you withdraw 105. The way this product worked, basically you put in 100, and then you continuously get streamed the yield. So when you go and withdraw, you still withdraw 100, but in the meantime, you've received all of the yield in a stream, right? Which is cool for what we were saying before, right? You can kind of connect these streams in different ways. So you could imagine a company putting $1 million in a yield generating opportunity, and then streaming the yield to pay their employees, for example, right? Or do what I'm doing, where I take all of my incoming streams and I stream them to buy ETH, because I like losing money. So like you can do all of these kind of cool things with composable streams. And yeah, the Hacker House was just a great opportunity to explore more of these concepts.
That idea, the NFT thing, made me think, like, you could have a trader who would sell like NFTs to their like loyal following, and then distribute a percentage of trading rewards to them. Like, it's probably a security, but it would be a really interesting way to sort of like monetize or sort of reward your followers.
Yeah, totally. I mean, I think this is what's going to happen this year. I mean, a lot of people are talking about, tokens making a comeback, real utility, dividends, right? I mean, this is the year that these things start happening. Because a lot of people are not as shy anymore about, doing things that previously would have made Gary Gensler very angry. But now he's not there anymore, right? So there's a lot more, I'd say, risk on behavior in crypto. And I fully expect that we will start seeing more and more people basically paying, creating tokens that would have previously been considered incredibly risky and dangerous. And I'm all for that. I'm looking forward to it. I think it was a complete travesty that the only tokens that you could create were tokens with no utility, right? And I hope that going forward, we will start seeing tokens that have built-in utility, right? I mean, if we're gonna onboard all of the world's assets on chain, then we need to have ways for those assets to be significantly better than they are off chain, right? And global instant settlement is obviously great, right? And 24/7 markets are anxiety inducing, but also very efficient. But we can do a lot more than that, right? Like I was saying, we can have these assets that distribute dividends automatically to everybody who holds them, right? In TradFi, even just distributing dividends is an incredibly expensive thing to do, right? You need to engage a bank, you need to, collect everybody's information, you have to make a bunch of bank transfers. Imagine if that was literally built into the asset itself, right? So that just by virtue of holding it, you're automatically getting paid your dividend every second. I mean, barring the kind of tax considerations, it's pretty cool. And I think that's the future that we want to build.
It's interesting, this potential switch from meme coin season to utility season. Like, I actually sort of postulated that when I had Arthur Hayes on this podcast, like, a month or two ago, or whatever. And he thought I was stupid because he argued meme coins have fundamentals. But I'm seeing a lot more chatter on Twitter about this idea of sort of moving into utility season, especially with a lot of like meme coins, very much sort of down heavily in price. Like, do you think a utility season could be like 2025's big thing?
I mean, I hope so. I hope so. I think what works in crypto is usually things that are very repeatable, right? So if there's a business model where everybody can kind of quickly create their own version of something and launch it, right? I have this thesis that crypto is user generated finance, right? So if you look at NFTs, people could just quickly spin up a project and launch it. Meme coins, meme coin launch pads. It's basically the velocity of creation creates these bubbles, right? Because people start creating and speculating on other people's creations. I don't think utility can create that because utility takes time. It takes a lot of time to build something useful. You can't just spin it up in 5 seconds, right? Now, AI is definitely increasing the velocity of that, right? Like you can vibe code a game in a couple of days, maybe, and maybe have a business model and a token for it, right? But it's never going to be as fast as meme coins. There's just no way that you can reach that velocity because utility takes time. Like building Superfluid is not a joke. It's not a meme coin. It takes time, right? Our token is the kind of the condensation of years of work, right? It's just not something that you can spin up quickly. And I think what creates bubbles in crypto are things that can be done quickly. So I don't think this will create a bubble, but I do think it will help us consolidate the kind of core of crypto, the kind of real part, which is important, right? I think what happens with these bubbles is that they expand the user base, right? And they expand kind of the market cap of everything. But what remains from one bubble to the next are the really useful things, right? So, you see protocols like Uniswap, like Aave, every bubble, they just get bigger and stronger, right? And even though, Uniswap obviously benefits from trading, but Aave doesn't benefit from meme coin trading in any way, but still it gets bigger and bigger every year, and every bubble makes it even bigger, right? Why is that? Because it's useful, right? So I think there are going to be a lot of utility projects coming, and there's definitely going to be growth from that, but the next bubble will not be a useful one. It's going to be another stupid one. It's going to be a different, new kind of stupid. We'll see. Probably not, not NFTs, not meme coins. Maybe something, I don't know, even stupider. We'll see. I'm excited.
All right. Yeah. Looking forward to the next level of stupidity that this industry can achieve. If that's even possible. Yeah, one thing, we have touched on this a little bit, but I wanted to ask, why would anyone want to have their money streamed like every second or sub-second? Sort of like, why does that make any sense? What sort of potential applications could there be?
So it's all down to basically the time value of money, right? So I'll offer you two options, right? Would you rather get paid once a year or once a month, right?
Monthly, yeah.
Right. So for exactly the same reason, which maybe you can't immediately articulate, it's better for you to get paid every second than to get paid every month. And that reason is the time value of money. Like basically, the sooner you have money, the better it is for you, right? Because if you have to wait for money, then somebody else is earning on that money while you should be earning on that money, right? So getting paid sooner is better, right? That's kind of full stop. And getting paid every second is as fast as it gets, right? So that's, it's the ideal scenario, right? Now, that is kind of just the reason why you want to get paid sooner, right? But then the counterpoint is, well, the person paying you is losing out on, paying you sooner, right? Which is also true. But if you look at it from a systemic level, if everybody was paying every second, it would be significantly more efficient. And the reason for that is simply that the velocity of money would be much higher. Money would change hands much faster and in a more seamless way. And there would be a much lower need for credit, interestingly. So if you think of a payday loan, basically is a payday loan only exists because you're actually giving a loan to your employer, right? So let me explain that. So you work for a month and then at the end of the month you get paid. What that means is you've provided a month of free labor in exchange for a promise of payment that is then kind of settled at the end of the month, right? So you've given a loan of a month of labor, and then you run out of money before you get paid, and you go ask for a payday loan, right? So you're basically borrowing because you lent money to your employer, which doesn't really make sense, but that is a very common occurrence, not only in employee situations, but also in B2B deals, right? Now, if everybody were paying everybody every second, you wouldn't actually have any of these cash flow gaps because all of the money would be settled in real time and it would always be where it needs to be, right? Everybody would basically get paid every second, right? So there would be no delay in payments. Yeah, anyway, there's all sorts of kind of advantages from a liquidity point of view. But it's also a matter of risk, right? So a way to think about this is, again, you work for a month and then you don't get paid, right? Your employer doesn't pay you. So you just provided a month of labor for free. If your employer is paying you every second, the moment they stop paying you, you can stop working, right? And again, from an employee point of view, it might not seem like a big deal, but if you look at it from a B2B point of view, unpayment, non-payment of a B2B, contract is a very big deal, right? If you look at most commercial contracts, about a third of the pages are purely about what to do if payment doesn't occur, right? Now, imagine you can just get rid of that risk because the contract is getting settled every second, right? So you can completely eliminate the risk of non-payment and the risk that a contract isn't actually executed, right? So there's a lot of opportunities. I mean, in general, I think for me, it's very hard to imagine a future where we don't use money streaming. Now, whether that's with Superfluid or not with Superfluid, depends on how well we execute. But I'm pretty sure that, 100 years from now, the idea that you get paid once a month will seem like a complete joke and everybody will have their money streamed because it makes a lot more sense.
It definitely would make it quite a little bit more straightforward running a cash flow of a company because you'd have two numbers. You'd have money going in, money coming out.
That's it. It's just one line. Instead of looking at the calendar, you just have one line of items.
Yeah. I was just seeing like it on a chart, you just have two lines like income, outgoings, and just like as long as one's higher than the other, you're good.
Exactly.
Yeah. Although sometimes it is a little bit more complicated than that, as SBF found out. Because he was just like he was literally looking at those two numbers and not thinking about anything else, which was a mistake. Yeah, I was gonna say this. It kind of puts dollar cost averaging into on another level. Like the idea is like I want to get DCA into this coin or whatever, but I want to do it every sub-second.
There's an app built on Superfluid for that, so you should check it out. It's called Super Boring, and basically that's what it allows you to do. So you just open a stream and it will automatically buy or sell your token every second without you don't need to do much. Basically, you just make one transaction and then it works. Yeah, it's I don't know if buying ETH is a good idea, but if you have to buy it, then buying it every second is probably best because at least you know that every time it goes down, you're buying it.
So you're buying it quite often.
You're buying it all the time.
It was funny to see World Liberty, like they've lost like tens of millions on their ETH position, and I was just like, oh, they're just like us.
They should have used Super Boring.
Yeah. I had a thought on the cash flow thing. Is it possible to cancel a stream? Like, let's say you had a business contract with someone and it was based on a number of like deliverables, and let's say they didn't deliver, and you're well within your right to cancel the stream, like, do you have that sort of optionality, or is that something that could be built?
Yeah, no, you can always close your streams. What you can't do is take your money back, right? So whatever has been paid, right? That's the cool thing of continuous settlement, right? But you can definitely close your stream anytime, which is good for optionality. I mean, it allows you to shut down your contract or whatever anytime, right? I remember actually once I was at a conference and a guy came to me super excited. He's like, "Oh yeah, I get paid my my contract is paid in Superfluid. I'm very excited about it." And then I met the guy a few days later, and he told me his stream was stopped, right? And he'd actually been fired, right? So like that's kind of what the future looks like. I think you get paid every second that you work. The moment you stop getting paid, that's when your contract ends, right? And I think it's harsh, but at the same time, if you think about it, the way that usually works is much worse. The way that usually works is that your employer fires you, and then you have to go and beg them for the last month of salary, because they usually, they're not going to pay you before firing you, right? They're not going to pay you the difference before firing you. So they'll fire you, and then they'll settle the payment if they do.
Yeah, I mean, normally, I guess, I don't know, if you're fully employed, it's sort of like legally required to.
Sure, sure, sure. I mean, obviously, it's legally required. In most cases, people get paid, but it's not automatic, and it's not. You know, it, I think if for people working on chain, sometimes your employer is a cartoon that you met on Twitter, right? So it's much better to have a smart contract guarantee than to have, a legally enforceable guarantee, because again, your employer might be an anon, right? And the idea that you can have let's say a fully enforceable employment contract where you will get paid every second until your employment stops is pretty cool. I mean, it allows you to go and work for a cartoon, knowing that, if one day you wake up and they're not paying you, you're not working for free, right? You're never working for free. I think that's very powerful.
I just realized it could change people's mindset a bit. Let's say if you, instead of doing it 24/7, let's say you had it that at 9 o'clock, it just suddenly, you see the money like coming through, and then at like 5 o'clock it just stops, and it's done sort of pro rata, so you'll get paid, your yearly salary, but it streams only during working hours. And the moment you see that stop streaming, hey, you're not working. Like, no way you working late under that system.
Yeah.
Um,
Yeah.
yeah, that'd be quite funny. Um,
We've seen people try that. Yeah.
yeah,
That's not what you want.
yeah. I had one thing like I wanted to talk about, and I think this is something that I've said a bit before, but the thing that I find most interesting about crypto is that it's programmable. Like, a lot of people are like, let's bring crypto to the real world and, pay with crypto in the real world. And I've never sort of seen much. I don't think that makes a lot of sense, because like just normal payments work really well in real life, whereas I think crypto payments work really well on the internet. Sort of the meme is like sort of magic internet money. And sometimes I wonder, I was just like, what if you try and do a lot of this stuff with like the banking system? Like, could you connect to like HSBC and have like streaming every sub-second with your sort of like banking app on your phone? Like, it's going to be quite tricky, right?
It's not impossible, right? I mean, the way Superfluid works is, again, we kind of built a new ledger, right? A new ledger system. I mean, could a bank implement that? Maybe, sure. Um, they can come talk to us. I would be happy to to explain how it works. It's all open source anyway. I mean, we've seen banks being very interested in some of the things that we've built in crypto, right? I remember reading like that they were looking very deeply into Curve, for example, for FX settlements. I think we will start seeing banks exploring this stuff, and I think it's just a matter of time before we see streaming, streaming payments in banking applications. We've talked to quite a few payment processors about this, and they're definitely all, excited about it. But at the same time, the problem is always an integration problem, right? So even just for us, right? You can't stream money to Coinbase. Why not? Because Coinbase doesn't work like that, right? Even though I can stream money to your MetaMask account and that will work, I can't stream it to your Coinbase wallet because Coinbase is basically a bank, right? And they operate in a more traditional way, and they don't actually use on-chain, right? It's, a kind of more traditional system. So, the idea that if you build any of this as an isolated system, right? Like if you build it, if one bank builds it, it's not going to work because then you can't send money to other banks that way, right? So that's always the problem. And that's one of the reasons why launching on chain makes so much more sense, because everybody has a wallet. And as long as your system conforms to the standards of the wallets, then your system will be accessible to anybody with a wallet, right? Like Superfluid can be used by anyone, right? And there's no integration problems as long as you have a non-custodial, ERC20 wallet, right? I guess that was one of the reasons why for us it was a no-brainer to, avoid kind of the fintech area, even though, payments is a very difficult thing to do in crypto, right? We chose a very difficult kind of subsector of the industry to work in. But doing this in fintech would have been impossibly painful. So I'm very happy that we're building in crypto. Um, and I think the time of crypto payments will come. It's probably not just yet. There are a few things that need to still happen for that to become a thing, but we're already starting to see a lot more payment volume on Superfluid, a lot more teams that are using us for payments than before, right? Mostly contractor payments, but also subscriptions. And I think that is just going to go up. This wasn't the case when we started, but I still remember actually the first team to fundraise in USDC, right? Like now, every fundraise in crypto is in USDC, right? That's just like how it works. When you're doing a crypto fundraise, your investors send you USDC, right? But I remember when the first one happened and everybody was freaking out and like, wow, they settled in USDC for their, they're safe. That's amazing, right? And I think that we forget that that was just 3 years ago, maybe 4, right? And now that's like complete standard, right? And right now, I would posit that pretty much every crypto startup has, more than 50% of their treasury in crypto, right? And what that means is that they're way more inclined to make payments in crypto as well. And, the more of these startups make payments in crypto and the more the payments ecosystem grows, the more, the kind of taxing software works, the accounting software, all of this stuff gets worked on because there's more people doing it. And as that stuff evolves, crypto payments will become, more and more common. Again, I think it's mostly going to be B2B to begin with, but eventually it will trickle down into B2C as well. It won't be the coffee. You're not going to go like people want to buy coffee with Bitcoin. That's not going to happen. But there will be things that you'll be buying with crypto, and it will feel completely normal because in that specific vertical, paying with crypto makes more sense, right? And I'm not sure exactly what it will be, but I use payments. I used crypto payments in real life a few times in Argentina, for example. So you can do it. You just need a better reason than wanting to show off that you have crypto to your friends when you're buying coffee.
And are you speaking to many gaming platforms about integrating this? Because I feel like that would be a super cool use case if you were just playing a game and like, especially if it was more like one of those strategy games where you sort of build up like income streams, if you were like doing that but with tokens, or if it's just like every time you get a loot box, you get like sort of streaming tokens. I would have thought it'd be cool. Because there was a joke someone put on Twitter, which was, it was like signing a MetaMask transaction every time you like do like every time you kill someone in the game or something ridiculous. Are you thinking about that?
Yeah, actually, one of our biggest users is a game. Yeah, it's they're not using it for the use cases you mentioned. In their case, it's actually a subscription basically. So you kind of have to open a stream of tokens to earn rewards in the game basically. And because it's fully programmable, the moment your stream stops, you stop earning rewards. Right? It's like fully on chain, fully automated. Which is a very good incentive for people to keep streaming tokens. It's been working very well for them. They've got, I think, 10,000 users streaming to this one account, and it's going very well for them. I think crypto gaming kind of never really took off as much as we all thought it would, right? But yeah, it's definitely an interesting space.
Or at least it hasn't taken off yet. All right, so I'm going to wrap up, but that was, really interesting to explore potentially the future of payments. I want to thank Fran for joining this episode, and thanks again to our sponsor, Awaken. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, make sure to read the blog. Thanks, and see you next time.
Thank you.